Good afternoon and welcome to your weekly FX options report. Today is Wednesday, May 12, 2010. In midweek trade, the major U.S. stock averages are posting a strong advance, with the indexes higher by over 1%. Now, investors are shifting their focus onto signs of improvement in the U.S. economy. Now, the Dow Jones Industrial Average did rise in morning trade to return to levels from a week ago before the U.S. equity markets did tumble on Thursday. Last Thursday, the U.S. market saw its worst one-day tumble for the equity market. And earlier today, the Commerce Department reported that the U.S. trade deficit for the month of March widened by $1 billion to seasonally adjusted $40.4 billion. This did come as global trade rebounded. The trade gap did rise to its highest since December 2008 on larger petroleum imports. Now, in terms of March exports, they did climb by 3.2%, while imports in the U.S. for the month of March rose by 3.1%. Now, there are still ongoing concerns about the effectiveness of the EU IMF bailout package, and we're seeing that there is safe haven demand, which has been boosting gold prices to record highs. Earlier today, Spain did announce the series of austerity measures to reduce their deficit, and the Prime Minister of Spain, Zapatero, said the government will be cutting public sector salaries. Now, in terms of overseas economic data releases, Eurozone first quarter GDP figures showed growth of 0.2% from the flat reading in the prior quarter. Annual GDP in the Eurozone was 0.5% stronger. And in terms of what we're seeing in the spot FX market in midweek trade, the US dollar is trading mixed, higher against the yen and the British pound, but flat against the euro currency. Now, one way to trade your views on US dollar strength or weakness is to take a look at ISC's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. In our next segment, we'll take a closer look at the individual IC-FX option pairs in our daily trend report. Starting off with the AUX, which is the U.S. currency against the Australian dollar. A bullish bias does remain above the 106 level. The RSI for the AUX is mixed right now with a bullish bias. Now, the preference of trading central analysts for that pair is long positions above 106, with targets standing at 116.50 and 122.50 in extension. Moving on to the BPX, which is the U.S. currency against the British pound, a rebound is expected. Now, that pair has rebounded on its support and is challenging its resistance. The preference of trading central analysts for the U.S. currency against the British pound is long positions above the pivot, which currently stands at 65, with targets at 70 and 73 in extension. For the CDD, which is the U.S. currency against the Canadian dollar, that pair is under pressure. Now, the RSI has struck against a major resistance around 70% and is reversing to the downside. The preference of trading central analysts for the CDD is short positions below 107.50, with targets standing at 99.50 and 97.15 in extension. Moving on to the UI, which is the US dollar against the euro, the upside does prevail. Now, that pair does remain within a bullish channel and is currently approaching its resistance. The preference of trading central analysts for the EUI is long positions above 76, with targets at 80 and 82 in extension. Now, moving on to the SFC, which is the U.S. currency against the Swiss franc, the upside does prevail. The RSI is supported by a rising trend line, and the pair has broken above its resistance and should post a further advance. The preference of trading central analysts for the SFC is long positions above 108, with targets at 112.75 and 116 in extension. Last but not least, taking a look at the YUK, which is the U.S. dollar against the Japanese yen, the upside prevails. The YUK stands above its support and should post a rebound. The preference of trading central analysts for the YUK is long positions above 90, with targets at 95 and 97.90 in extension. Last but not least, looking ahead to your weekly trend opinion, last week the U.S. dollar did continue to strengthen against the major currencies. Now, Trading Central did suffer one loss on their YUK call, but at the same time they reached their target on the CDD call. In terms of portfolio performance since its inception, which was in August of 2007, it is up by 1,418.77%. And since the beginning of this year, January 2010, it is up by 138.67%. Now, we bring you two trade alerts right now, which is for the SKA and the PZO. Now, starting off with the SKA, the dollar does seem to be losing some of its momentum, and Trading Central did recommend in their last follow-up on Monday to consider puts on the SKA, as the pair should strike against its channel upper boundary, and also the daily RSI is turning down. Trading Central analysts are also looking at the PZO because the RSI is currently turning down, and the pair has struck against its bearish channel upper boundary and is expected to face further weakness. Now, in terms of the Trading Central forecast, they do call for a down move towards 120, 160, or even 116 and 75. Now, looking ahead to next week, Trading Central analysts will be looking at the EUI, the SFC, the CDD, as well as the NZD. Starting off with the EUI, it is approaching its previous high, and the daily RSI does lack upward momentum. In terms of the SFC, on the same configuration, it is approaching a very strong resistance. And for the CDD, it has struck against a strong resistance and does remain below an intermediary resistance as the RSI is turning down. Last but not least, for the NZD, it is supported by a rising trend line and is expected to rebound on its support. And that wraps it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.